All right, everybody, welcome to another stream here. If there's anyone by chance awake in California, all the best to you. Certainly crazy days over there. Hoping for everybody to have I don't know, the community's rallying. It's nice to see, and it's just crazy to see how some people think that this can be politicized. I haven't been following it that closely, but seems that people try to do that. It's good to see people just come together, though, in a dark moment and help out, including firefighters from Ukraine. So I was very happy to see that as well. I have heard some with my streams here. I've heard that they are the audio's not that good. I'm testing it right now, asking a couple people here if they how it sounds. I'll get started in just a second here. Another thing I'm doing with these live streams is I'm going to cut up, smaller pieces of it just to put into normal videos because I think there's still a lot of value there. But yeah, it's been nice to live stream as well, even though, still small in the YouTube world, trying to build a community here. And I think that the setup is good. Finally, after many years, got a lot of good data to share, a lot of good charts, and I'm going to try to, to keep doing that. So just gonna check a couple more things here before I get fully started with this presentation this morning. Crazy days for sure. But yeah, I just hope people can continue to come together as we bring in new presidents of the United States. There's a lot of bluster, a lot of talk, in my opinion, scarily towards the lines of autocracy, which we just don't need any more of, certainly in Europe, neither in America nor around the world. So we're going to see how it plays out. If you do want to unplug yourself from a lot of these politics, as I've said for many, many years, still Bitcoin is a way to do that, as a savings vehicle, as a method of payment, as a method of donation, helping family and friends around the world. Really is an incredible thing. So we're going to continue to talk about that, but here we're going to talk a little bit more about the growth of Bitcoin, the adoption, whether it's power or exponential. And I have another chart today to discuss a little bit more. That's going to be looking at the S&P 500. And we're going to start with that just a second. Just a second here. If anybody's listening and thinks that my audio is too high or too low, let me know. Still having issues with the gain a little bit here. People said it was good. In the first few videos, but then in some latter videos, I heard that the gain was not good enough. So, all right, I'm going to get started here in just a second. Let me just check one more thing. All right. I'm going to switch over now to the old power trend. So in the last video I did, I broke down why Bitcoin fits a power curve and not an exponential curve. Okay. You have this sort of gradual growth on log scale here. Whereas if it was an exponential curve on log scale, it would be a straight line. Okay. And these lines are drawn mathematically with all of the data in the Bitcoin ecosystem from the beginning. All right. And we can clearly see, without even looking at fancy numbers, that the power curve, that is this gently sloping green line, By the way, I changed the colors just to match the titles. Don't think about some of these things when I'm recording sometimes. This gently sloping green line fits the curve much better. That fits the Bitcoin price, Bitcoin adoption, much better than this straight black line on log scale. Okay? It's the same pricing data is feeding into both of these curves, both the exponential straight line and the power curve asymptotic, generally sloping line, which is declining in steepness every day. It's the same data that's feeding into both models. It's just one model fits better than the other. Which one fits better? Clearly, the 96% R-squared power trend fits much better than the 86% R-squared exponential trend. But I figured, so I see the last live video if you want to look into that a little bit more. I figured a better way to sort of go through this now is let me show you a market which grows exponentially. And growing exponentially, we can see, indeed, how this is going to grow compared to the power trend. Okay, so all right, this was Bitcoin. Now what do we have here? Looking at the S&P 500 with an exponential trend. All right, and then I'm also going to look at the S&P 500 if I put on a power trend. You can do it both ways. Just see which one looks better. Okay, this is S&P 500 data since 1950. This is really when the S&P started. I have indeed further data going back into the 1800s, but it's not really necessary for this presentation. We'll just start when basically the S&P was really being recorded from the 1950s here. Okay, so ups and downs, booms and busts. We see here the .com boom, really big one right here. Massive bust till about 2002, 2003. GFC, boom, massive bust till about March 2009. Okay, big drops from like 1500 down to it hits 666. Actually, I'm not going to see if it's going to do it on this map. Yeah, it doesn't. Yeah, March 3rd, 696. It hit about 666 in March 2009. Okay, so that's over a 50% drop. All right, so and then of course we have massive money printing and inflation, but we also have growth in the market. This is where it's hard to distinguish one from the other. We have growth in the market all the way until COVID. Actually, COVID was here. The first drop was right here, the COVID scare, and then more money printing and markets grew. Meme stocks, whatever, and Bitcoin was growing here as well. Then we have a fallout here at the end of 2021, which interestingly, Bitcoin had a fallout there as well, and now it's growing again. People are wondering, is this the top? All right, we see even in the last couple weeks. This is a weekly frequency, by the way. So in the last couple of weeks, we see a dip from the end of last year, 6,000 down to now about 5,836, January 14th. All right, so this is the S&P 500. I've said this many times, but I'm going to say it again. Most financial markets in the world move exponentially. People talk about that. They think about it exponential. It looks like it's moving on a straight line on log scale, but what does that mean really in practice? It means, well, we can sort of intuitively and also just realistically, when we look at a chart, we can find doubling time very easily. Okay? And doubling time is simply a function of the compound growth. And then you have to ask, well, why do markets have compound growth? Compound growth is simply the interest rate or the yield to maturity or the IRR, the internal rate of return. All of these terms that you hear in finance world, if you studied finance or not, they all mean the same thing. A bond yield, internal rate of return, yield to maturity, ROI, IRR, compound annual growth rate, otherwise known as the interest rate. The interest rate. Now, interest is going to mean a few different things, whether you're a bank or whether you're a private investor, but they're all revolving around this idea about a constant return per year. Now, in reality, of course, there's no such thing as a constant return. Okay, someone can do really well investing in a startup before it takes off to unicorn levels. Your returns are never going to be as good as they were when you got in at the base level. Okay, so it just shoots up and whatever. But once a business settles down, and if it does have traction, if it does have adoption, and it's working well through all facets of the supply chain and the business, a business is going to grow exponentially. Why? Why is that? It is my opinion that the sole reason for this phenomenon that businesses grow exponentially is the interest rate. And why would you say that it's the interest rate? Well, usually in a business, 50% or more of its capital, that is the money that comes in from the outside and enables the business to move forward, is in the form of a bank loan. A bank loan. Okay, so sometimes the leverage can be as high as 2/3, 67%, sometimes 75%, sometimes it can be in the dot-com boom times 110%. Crazy leverage sometimes. But that capital that's coming in to a business is mostly in the form of a bank loan. You can talk all you want about innovation and strategy and marketing and TikTok videos and whatever you want, branding. But at the end of the day, credit is a huge portion of the way that businesses are run. Doesn't really matter what type of businesses, it's just a huge portion. And so, understanding that the interest rate is something that is an exponential function, and I'll explain that a little bit more here in a second, but the interest rate is an exponential function. Understanding that credit or banking loans are usually at least 50% of a company's corporate balance sheet structure, then it should be no surprise that the way that corporate profits grow, the way that corporate employee numbers grow, revenues, salaries, all the rest, the whole kit and caboodle, the whole thing, it should be no surprise that that also grows exponentially. So, I've said it 1,000 times, how does an exponential curve look on log scale? Well, it's a straight line. Okay, so let's see if we can get to that here. This is linear scale, right? Just looking at the S&P linear. Let's draw an exponential trend over the S&P 500 in green. All right, I'm going to draw it right now. Very simple. Taking the weekly data of the S&P 500, throwing it into a model, which a model is just a very simple calculation of making a trend line. All right. And you get this. You get something that looks like this. All right. Now, it's not necessarily predictive of future results. We'll look at all that. But let's zoom in here back in the day. All right, look, to be clear, this is a line just like I did here with the Bitcoin chart. All right. This is the all-time line. Okay, so if I go all the way back to 1950, take some of this data from the S&P was 20. All right, 20, 30, 40, 50 over the first few years of the 1950s. Now it's 6,000. All right, you take all that data from all these years and you put it into a model. Model is very simply drawing an exponential trend line. What does that line look like? It looks like this. And this is the beautiful thing about statistics is, you can see the fit over the years. And if you look in the tooltip right there or down below, what do you see? You see 97% R squared exponential trend for the S&P. So let's just go back in time now and look. Now look, this is back in time. This is when I'm going back in time, but I'm using the all-time data. So this green trend line did not exist back in the day. All right, this is just putting all the data together. But putting the data together, like you see here, 97% R squared, it's a pretty amazing fit. It's a pretty amazing fit. And we can see that there's boom times that can last years, decades. I'm not trying to time the market here. I'm just trying to illustrate what an exponential trend looks like in a market. And the S&P 500 is a great market for that. Obviously, it's a great index. It's a great barometer to look at to try to understand this. We see the S&P was below trend here, above. And again, this green line didn't exist at the time. I'm just backwards drawing it based on all the data until today. Look at how interesting this trend line looks. It's S&P 500 for years, decades is above it. Let's keep going into the 60s, 70s. These are rough times in the U.S., but still the markets are going. Get the Vietnam War, segregation issues, Jim Crow laws, lots of problems in the U.S., but markets are still growing. You can talk all you want about fractional reserve banking and this and that. Markets are still growing. All right, we fall below here in the 70s, the era of stagflation. We really fall below the trend now. This is interesting. In the 70s. And what happened here? Well, we went off the gold standard. Okay. So we were on a gold standard here. We were off it here. And now, so we stayed off this all the way 70s and 80s, but due to excessive pumps here, and again, I don't know the answer of if the pumps are solely money printing or is it solely, look, people try to backdate inflation. It's a futile exercise. Taking prices and trying to see the general level of price goods, it's impossible. Your basket's going to be different than my basket. It's going to be different from my neighbor's basket who has kids, more kids than I do, has more college tuition to pay for than I do. It's a futile exercise to measure inflation. But we can still benchmark things like stock markets and understand. But look, the reason I said I went into this tangent about inflation is something happened here in the 90s which no one could have predicted. And it was the massive boom of the World Wide Web. Started in 1995, and we pushed us well back above this all-time trend here. All right, popped, went down again, back up again, had this double sort of top in a decade, 2000, 2008. This is when I was cutting my teeth in the stock market, going down. Luckily, I bought some gold here, actually, but that's another story. That got me into the hard assets and hard things. But anyway, fell back down. Look, this is super volatile. I'm not trying to say you time this. You can get rich off of buying the bottom here and selling it here. Not at all. I'm just showing you this is the way that markets move. All right, and why do markets move this way? It's because of interest from banks. Banks have more than typically 50% of any company's balance sheet if they're going to have loans and debt to pay off, which is under their operating costs. They're going to have interest expense to pay off. Credit is everywhere, is ubiquitous from that standpoint. And it's not a crime that is the case. It's just how it is. And then, we had major credit booms here during COVID and even now where the credit is supposed to be tapering off. Higher interest rates were growing high again. So it's not necessarily when interest rates are falling that the stock market grows or rising that the stock market doesn't grow. Interest rates have been rising over the last few years and the stock market has been growing over the last few years. So it's hard to tell. But look at the line all the way along. This is the trend line of the S&P 500. Okay. Now, I got to put all these on and put it here. I'm going to take them off. Let's look at log scale. Actually, I kind of blew it, but let's not do that yet. Let's look now. Maybe blew the surprise there, showing the power trend, but that's all right. Let's look at the green line here, not as a function of all time. Okay, look, this is all time data. Let's look at it as before I did with Bitcoin here. I showed an evolving power curve and an evolving exponential curve. Let's look at the evolving exponential trend line for the S&P 500. I'm going to put that up now. Okay. I'm going to put this on a log scale in a second, but it's actually better that I don't do it at the beginning. Can you see it there? The play button, the dotted green line. Okay. This is how the exponential regression is growing over time. It's just one point to pick over time, but it's where the trend line is. It's not exactly the tangent. You can kind of think of it like it's a tangent. It's not the tangent at any time, but it's just sort of the last variable that's going to happen based on all the data. That's what I'm showing you here. It's where the trend line evolves to, okay? And in the future, it's going to be the same thing. All right, this is going to overlay here. But let's go back now to the beginning and let's look at the evolving trend line versus the actual trend line, the all-time trend line. So the all-time trend line is this solid green line, number one. All right, this S&P 500 exponential trend. This is how markets grow exponentially. Now look at how this trend evolved over time. So at the beginning, it's under trend. Okay, see the trend is very much following, as we move through the data here, the trend is that play button. It's very close to the markets. And then all of a sudden we get to here, top out. Let's zoom out again. All right, the trend line, the dotted line fell back down again, and then we start rising above what was the prior trend, and we're rising here a lot. It's pretty far away. It's hard to overstate how this thing can change. It can certainly change directions. I'm not saying this definitely predicts future performance, right? So this is a pretty big delta here, right? You got the S&P 500 itself is 100. Let's find out where it's exactly 100 to make it easy. Easy math, roughly. S&P 500 here in 1968 was 100. The trend, the all-time trend to today, if we took all the data till today, would have put the trend at 80. But actually at the time, we would have seen the trend at 15% above the S&P 500. That is 114. 15% above. So this shows you that the exponential curve, whether the price is above or below, whatever, that it's very susceptible to changing quickly based on the price of the asset, and it can be a long time before that trend switches. Okay, so this was really pulling the trend up, the exponential trend up, and then as we got to here, the down years from the 70s and the 80s, it pulled that evolving trend back down. And look at this. We went through a period from 1975, roughly, where the evolving trend fell below the all-time trend. All right. We went through a period here of like 40 years. Something like 40 years, from 1975 till 2005. 40 years where the exponential trend was under, the evolving exponential trend was under the S&P 500 itself. So this, let's take off this actually. This is more like what the trend kind of was looking at. I know it's harder because I could have drawn 5,000 lines here, many more lines, 6,000, whatever, straight lines to show you the actual exponential trend. I'm just showing you the evolving trend. It's like the last point on the data. But I'm not saying that this is like beautiful predictive authority, but it's supposed to show you that the market is moving exponentially, because even though it might be slow to catch up to that exponential trend, that all-time trend, it eventually catches up and eventually hits it. This is just how the formula works out that way. And why does it work out that way? Because of compound interest, because of exponential growth. All right, so it worked out that way. We caught it, and we went back down again during the dark 2010s. See, the evolving line is below the all-time again. And then, of course, it was pulled back up with this huge booms that we've had in the last couple of years, COVID, and then recently here. You can call this the AI boom, perhaps, because we have NVIDIA. Obviously, it's a huge portion of the S&P 500 that's growing here. And then once it matches, the evolving will equal the future, because this is all the data. Okay. Now, let's zoom back out. This is the exponential trend. All right. But now I've already sort of alluded to it with a few clicks there on the power trend, but I'm doing the opposite of what we did with Bitcoin. Okay. With Bitcoin, I told you the power trend was in green. All right. Power trend was in green. Exponentials in black. I told you clearly that black doesn't work. All right, you can just see that it doesn't fit. You look at today with Bitcoin, the trend, the price is 95,000. That's the last data that just fed into my model. The trend is 89,000, power trend. The exponential says we should be at 363. So it's not a very good fitting model if you thought it was exponential. Now I'm going to flip it. Let's look at a market that is naturally exponential and see how the power looks. All right, you ready? I'm going to draw a power trend using the same S&P 500 data over the lifetime now. Okay. Due to the nature of how a power trend is supposed to work, all right, doesn't fit the data at all. It's hopeless. It's hopeless. To try to think that the power trend is has any sort of predictive power. And when I say predictive power, I'm not saying get rich off of this prediction. I'm saying, what is it naturally doing? How is it naturally growing? To say that the power trend is what the S&P 500 follows is just, it's ludicrous. You can see it's nowhere close to the evolving trends. All right, you see that little bit of an asymptote it's a concave up in this situation. Sometimes it's concave down, sometimes it's concave up. Actually, it is concave down. We'll see that in the when I do log. In any event, just look at that. You never make any sense of it. Okay, you go through precisely this trend line once, right there in 1995. There's one inflection point, and you go through. You don't even. Well, yeah, I guess you do go through it here in 1956. So 2 times the value of the S&P 500 has intersected the trend line. Whereas, it's not that much better for the exponential, but you're going to intersect it a few more times, at least with exponential. And it's just going to be hugging the exponential trend way more than power. So it's very clear here. Even looking at the R squared, only 72% for the power, 97% for the exponential. Just simple, common sense. Look at the curves. Occam's razor is going to tell you the S&P 500 follows an exponential trend. It does not follow a power trend. And the evolving is even worse. Right? It looks just even well worse. The evolving power trend. Here it is actually concave down. Did I get that right? No, concave up. Concave up. The bulge is facing down. All right, on the power. And then you can see that the power makes no sense here. Okay, so now let's put this on log. Remember, how do exponential trends look on log scale? Scratch that. I repeat that statement here. Hey guys, thank you for the comments. Welcome here. I said log. We're going to look at an exponential trend line here on log linear. I'm just going to put the left hand axis on log, and we'll see that the S&P 500 indeed grows with an exponential fashion. How do we know that? The trend line will be a straight line on log scale. So I'm going to do that now. All right. Do that now. And here you can see that the green line, the exponential trend, remember green is exponential now. Here, green was power. All right. It's number 1. Here, the best fitting trend, number 1, is exponential, the green line. All right, so let's take off power. There's the S&P 500 over 75 years. 75 years. Prediction is not a great term here, but measuring the nature of the system. All right, this is base 10. All right, so every leg up here is 10 times higher than the next. Okay, it doesn't matter if you're base 2, base 10, whatever on log scale. Wherever you put the log scale, it's going to look at a straight line. It's going to look as a straight line if it's exponential growth. So that's what we have here. And that's what it is. Okay, so we can have the evolving trend line be higher here in the 50s and 60s, be lower here in the 70s and the 80s. The internet comes, .com, GFC, lots of crazy stuff. But at the end of the day, this thing grows exponential. Now, let's take off the all-time trend, which is the solid green. Let's look at the evolving. But let's keep in mind now, I want to see how the evolving looks relative to the past, moving into the future. All right, so here's the future, the straight line. As it evolves, how close is it to the future? Okay, so let's take off the all-time. Here's the evolving. on log scale, it looks pretty good. All right, yeah, it's different here. It's different here. It's like higher than lower. But as we get closer to the all-time, it pretty much looks like it's going the same direction, right? The same trajectory. Clearly, it's moving in this trajectory where, okay, it's a little bit lower moving into the present, but then it straightens out, and this is exponential growth over the long term. Now, compare that to Bitcoin. Let's go look at the evolving. Let's just look at them both: evolving power and evolving exponential of Bitcoin. What do you think Bitcoin is? Do you think Bitcoin's exponential or power? Bitcoin's clearly power. It's clearly evolving with a power relationship, where those evolving points that we find every day, where the coefficients would take us, are getting closer and closer every day to what the future looks like. Whereas with exponential, it's just nothing like that. Look at that kink that starts right here. It's like once we take in all the data and then project out with exponential, that's not how Bitcoin's growing. It doesn't fit it at all. It doesn't fit the data. It's not even something where we can say, like here with the S&P, well, sometimes it's above it, sometimes it's below it. No. Bitcoin is growing exponentially. Sorry, the S&P 500 is growing exponentially. Bitcoin is growing with a power relationship, because you can clearly see that a straight line on log for Bitcoin will not fit it. It will not fit it. The price of Bitcoin today, 95,000. The trend line, 300,000, 360,000 on exponential. It's just not anywhere close. Whereas the power is 90,000. Damn near right on it. So that is very good. This book is Sidney Homer's A History of Interest Rates. I think it is a must if you are a financial geek or like to look at the history of markets. This is Sidney Homer and Richard Silla. Very good book. This goes back to Mesopotamian times, ancient Greece, Rome. Looks at relative rates of interest, looks at bond yields. And the long and short of it is bonds are rarely over 20%, closer to 5% on average. That's the long and short of the entire book. So if you would actually look at a chart, I don't have it offhand, but if you looked at a chart of the U.S. 10-year, which was close to 20% in 1980, and it went down to 1 or 2% in 2008. And if you looked at the target Fed funds rate, which was even more extreme, it went above 20% in 1980, and it went to exactly 0% in 2009. Those were extremes of interest rates, like throughout the millennia. That's a pretty wild thing. So it's a good book. You can find a lot of good little tidbits on interest rates. But at the end of the day, look, this is actually a good book to talk about for this video. This is exponential. Everything in this book is exponential growth. Exponential growth. These are what the markets are actually doing. These sort of growth rates, these trends, they're going exponentially, and it's simply because compound growth moves. That's by nature. That's what it means. It's exponential growth. I started to talk about it a little bit in the last show, but you can kind of see this with the closer you get to 10 years. It's like it's easiest in your head. So 100%. So doubling time is another thing here. Exponential growth. Remember, it's constant growth. Okay, so looking back out at Bitcoin, if Bitcoin was growing constantly on log scale, it would go on this black line. It's not, though. It's declining in the rate of increase. The rate of increase is declining. It used to be in the hundreds of percents here with the power. All right, so it's moving on power, not exponential. So it used to be in the hundreds of percents of return here, and now it's down to about 45%, 45% per year, and it will decline very slowly as we move on. So that is not constant exponential growth. It's not constant growth. It's a slowly declining growth, although it's a still very strong growth. So again, don't get discouraged if you think that you're like behind the eight ball or haven't gotten enough Bitcoin yet or whatever. There's never enough, by the way. You got to never financial advice, but it's never too late to stack. That's for sure. Bitcoin doesn't move that way. This is a declining increase of growth. It's not constant growth. If it was exponential, it would be constant. But interestingly, markets, like I said, they move constantly. So now the green line is what fits best. Exponential here, S&P 500 exponential trend in green, 97% R squared. That tells you very simply, even if whatever you think about the Federal Reserve, whatever you think about money printing, which by the way, I make no claims that those guys know what they're doing and are doing a great job of manipulating interest rates, manipulating the price of credit. I make no assurances there at all that they know what they're doing. Most of the times they probably don't, because the market will always know better than a planning board, as Friedrich Hayek told us. So it doesn't matter. At the end of the day, the point is, it doesn't matter at the end of the day. Markets will grow exponential because that is the nature of the interest rate. And all companies in the S&P 500, not all, I should say, most companies in the S&P 500, in order to continue that growth, to continue delivering services and goods to the consumer, need credit to continue. Now, I understand that phrase gets abused a lot by politicians, right? It's like credit is the lifeblood of the economy. We need bailouts, this and that. No, I'm not saying that either. If you can't stand on your own bottom, as they used to say in the textbooks, if you can't deliver according to your own capital, and you need sort of outside help, then you should go bankrupt. So we should have let more companies go bankrupt here. We created a lot of zombification in banks. You can see that if you look at the balance sheet of Fannie Mae and Freddie Mac, which still exists to the tune of trillions of dollars. All right. The assets of which are held by the Federal Reserve. So this should have probably been deeper, that forest fire, to use the fire analogy, to clear out the underbrush, to clear out the nonsense. Companies should go bankrupt. They should. And we've stopped that in the United States for sure during these periods. We didn't do it as much here, actually. There are many startup companies that went bankrupt, rightfully so. Many .com, just crazy purchases. But here we really bailed them out. We really bailed them out in 2009. But nonetheless, all the bailouts, all the whatever, markets still grow exponentially. You can't change this trend. This is a powerful trend, not a power trend, but a powerful trend. And so again, to put back the power trend now all time on log scale looks like this. Let's take off the evolving. Here is trying to shoehorn in S&P 500 data to a power curve. You can do it. You can draw a power curve on the S&P 500. Look at this chart right here and tell me that the S&P 500 does not move in exponential. Try and tell me that. Right? I mean, you'd be laughed out of the room in any way, shape, or form. It clearly does not move in power. The S&P 500, like most financial markets, move in exponential. Their doubling time can be quantified. It's constant. And by the way, what is the compound growth and doubling time? I've sort of talked around it a lot. Let's take off the power. It's 7% per year. 7% per year. Okay? Rule of 72 will put us right on that very simple math. Remember, 100% compound growth will double you every year. That is a fixture of compound growth. Okay? It just if your return grants you 100% a year, good for you, first of all, but that means your capital is doubling a year. And the capital that you just had is doubling on top of that, right? That you like sort of paid out from before. So it's very quick growth. If your return is 10% compounded, your investment, does it double in 10 years? No. It will double every 7.2 years. 7.2 years. So that's the rule of 72. Take the percentage, 10%, drop the percent sign, and just divide that into 72. How many times? That will give you doubling time. Okay, so these are little tricks that we can do with exponential growth that you cannot do with power. So, and it actually, that is about for the S&P 500, that's about right. It's a 7% return. And if you had dividends, if you took those dividends that it paid out and added it back and reinvested, you get about 2 percentage points higher. So you get up to 9%. But I'm not showing that here. That you'd have to do a little bit different calculation to show the trend line. You'd have to, the index would be a total return index. It's just a little bit different. But I can tell you, based on the history, it's 7% without reinvesting your dividends. You still receive those dividends, you just don't reinvest them. Okay, so 7%, that's what I'm showing here. And if you reinvested, you'd get up to 9%. Okay, but 7%, how many times does 7 go into 72? 10. So there, So there, we can see that this trend line will double roughly every 10 years. All right, so let's just pick a random spot. 1997, June, 607. All right, moving into the euphoria of .com, 607 was the trend line. All right, let's go to 2007, June. 610 was the trend line. Let's see what the trend line is in 2007, June. 1227, double. All right, and it's a little bit more, but you know, it doesn't matter, right? It's rounding here. The formula is the main point, and I always try to. Sometimes I forget some of the little data points to put on this chart when I'm explaining, but anyway, I hope you get that idea. The markets move exponentially. Most things in the financial world moves exponentially. As far as I can tell, it is precisely because of this. And it has nothing to do with central banking. It has nothing to do with fractional reserve banking. This actually, thank you for this question, F Society, because this is the key. It just has to do with the rate of interest. Interest is a compounding phenomenon. Jefferson, Einstein, they said it was the seventh wonder of the world. One of them said it. I can never remember which one. The other implied it, perhaps. It's just nature. It's science. That's how it works. The predictive power is another thing, right? So like, especially with markets, I want to make that clear. Like, try to trade this trend line. It's very difficult. Right? It's generationally difficult to understand that here in the 70s, you really should have been loading up on the S&P, and then say here in 2000, you really should have been selling. You know, yeah, I mean, if you sort of would understand that, great. But as we evolved it, you know, it becomes more difficult, right? So that you see that the lower trend line here, the evolving trend line, the dotted line, you see it's lower than the all-time. But actually, look here, it's still lower than the all-time in 2000. So timing, you wouldn't have been able to necessarily trade based on this metric alone. You wouldn't have necessarily known that we were shooting over your skis. I can draw 97 percentile bands and stuff. We can look at that in a future video. But it's the point is not trying to trade this trend. The point is just to show, and for clarity, specifically as it relates to Bitcoin, the markets move exponentially. Bitcoin, though it is a financial asset, it's something unique, it's different, it's being adopted. It's like a network. It's growing in power. Okay, so clearly here, looks a power trend on the S&P 500 makes no sense. All right, makes no sense. Way wrong. Way wrong. No predictive power in the power curve on S&P 500 because it doesn't make any sense. Markets are exponential. Bitcoin, however, is like a network. It's growing. It's scale invariant. The way that it grows here is in proportion to the way that it grows here. And how can we tell that? Well, let's look at this evolving trend line now for Bitcoin. It looks great. All right. As I've talked about before, it's a little bit high here, a little bit high here. But as we get closer and closer till today, really from 2016, look at that fit. It's unbelievable how how scientific that is. Okay. Now, before you think that, again, I'm never financial advice, but I want to talk about this idea of the science of these growth rates being interesting, right? I'm not a statistician. I'm interested in applied statistics, right? Just trying to apply it to real things. Here's a good book. If you haven't seen this, it's called Scale by Jeffrey West. Scale. It is, I'm just going to read it. The universal laws of growth, innovation, sustainability, and the pace of life in organisms, cities, economies, and companies. Okay. He talks about all different trend lines and trends and rates of growth here. But power, of course, is going to play a big part, because power is how cities grow. Economies are more exponential. Companies are more exponential. Organisms can be both. There's both. There's also logarithmic and linear. Right? Different ways. He talks about them all. But it's a very good top level overview on these different trends. Because at the end of the day, we're just talking about trends. We're talking about how things grow, and it's not like it's observation. It's certainly smart people in the past have been able to put the formulas together. I could have never done it, I'm sure of that, but they've been able to put the formulas together to allow us to see, is there something here that we can wrap our heads around, that is just actually working this way? And indeed there is. Indeed there is. I mean, you just cannot deny that a market like S&P, and by the way, you're going to see this with stocks, bonds, gold moves this way, by the way, as well. It's exponential. They all move in exponential simply because of the nature of compound growth, the nature of interest. They certainly don't move in power, because if I would put the evolving power curve here, notice how you get that kink again, that really bad looking kink. The power curve is predicting as it can based on the data, but as it evolves, you get that sort of weird sort of kink here. The black dotted line it's like kink. It's showing like, well, I got all the data, but actually the trend line projects out here. It's nowhere close to reality. Whereas if you look at the green line, the exponential trend line, it almost looks pretty parallel. There's a little bit of a kink because exponential is a little bit. I shouldn't make too many claims there, but it's a little bit of a kink in the green, but it's nothing like the power. And just look at the numbers. All right, the S&P 5,800 at the moment. The trend line is 4,200. Okay, so again, I'm not saying it's going to revert to trend. That's a dangerous game with markets that have been this evolved for so long. But nonetheless, we are over trend. But the power trend shows us, which we know that we're not on. Like, markets don't follow power trend. That's a 1,100. It just looks terrible. So again, shows you that why markets do exponential. But that kink, notice that it happens with the power. And then if we go back to Bitcoin, the opposite occurs with exponential. All right, so here's the evolving power. I'm going to put evolving exponential. Now we have the kink with exponential. So hopefully that can really drill home how you just have to look at the data at the end of the day. Let the data tell you what is happening. Don't try to shoehorn your ideologies in it. If you hate the Federal Reserve, or you hate fractional reserve banking, or you hate the ECB, yeah, they don't do a great job. I would fully admit that, fully agree with that. Bitcoin is a beautiful escape hatch from their mismanagement of the economy. But let this be a guide to how Bitcoin might grow and how you could help your own family as far as where this goes. Because look, Bitcoin grows on a power curve. You can see that as it evolves into the all-time trend lines, power just continues on beautifully. But with exponential, we get that kink up. See, we get that like sharp change here, which just shows something's not right in calculations. All right. I mean, they are correct, the calculations, but something's not right in the nature of the exponential trend as it relates to Bitcoin. Just surely it's not exponential. Vice versa, the same. Something's not right with a power curve applied to the S&P 500. A power curve does not work. You get that weird looking kink as we evolve to today's date. You get that weird looking kink in the black, whereas we don't have that with the exponential trend line. All right. So there you have it. One last thing, you can evolve out the price here. So predict out the price. Again, loosely when I say predicting. So let's just take the trend line out now to 2030. This is also quite interesting, by the way. This is why, again, I don't know for sure, but for sure we could have another, like with AI or whatever, we could have huge booms in the S&P 500, right? And we had that in the 90s. This is a good point to make as I close it. In the 90s, let's take off the power because it has nothing to do with this, right? In the 90s, the exponential trend as it was at the time was 380. All right, so you might have think, that's pretty bad. Actually, we're ahead of trend. Maybe I'll sell. That would have been a bad move in the mid 90s as the World Wide Web was coming into fruition, as companies were laying massive amounts of fiber optic cables around the oceans, around the world. That would have been a bad move to sell at that point. So I'm not saying that you sell every time you're above trend, right? Not saying that at all. But if we look at how this trend has evolved with the S&P 500, all right, we go out to 2030, look at the difference between, say, the growth of Bitcoin on the growth trajectory that it's on versus the S&P, even though the S&P is on a quote unquote more powerful rate of growth system that is exponential, right? Because exponential is constant. It is true that if you compare just bluntly exponential with power, exponential is constant growth. So you figure out that growth rate, that's what it's going to continue at. And as I told you, it's 7%. 7%. So if you continue out this power trend, 7% per year, double every 10 years, the trend right now is 4,200. What's it going to be by 2030? It's going to be today's S&P, 6,400. A little bit lower than today's S&P, but you get the idea. Now, look, I'm not saying that the S&P doesn't stay above there till the end of the decade. I'm not saying that whatever AI doesn't change it, reinduce some growth in the markets, whatever. But I'm not, personally, again, never financial advice, I'm not putting my money in stocks these days because I do think stocks have been exhausted from excess money printing, from excess leverage. Again, it's not unnatural, but it becomes a little bit more distorted when you have major central bank interventions and government bailouts. So that's my view. Doesn't mean that we couldn't have in the next, let's say the next 6 years, right, till the end of the decade. Doesn't mean we couldn't have another .com like boom, right, where we thought we were like over trend, but like this would have been the worst thing if you sold right here in 1994, $460, because by March, April of 2000, you would have tripled your money, almost quadrupled your money. So again, this is no financial advice, but the point is the trend shows you that this is actually not something to ride home about. If you want to talk about protecting your family, saving as a vehicle, this growth it's nothing to ride home about. S&P 500, the stock market, financial markets, they grow exponentially. It's not going to change. It doesn't matter the next Federal Reserve chairman that comes in. It doesn't matter if it's Donald Trump as president or, Vladimir Putin invading another country. The jerk that he is. That's about the kindest thing I could say about him without getting censored on YouTube. The S&P is still going to be exponential growth. But, you tell me if that's a growth rate you're happy with amidst all the price inflation, amidst all the rest. If you're happy with that growth rate, then stick with stocks. Meanwhile, Bitcoin All right. It would be great if Bitcoin actually was on exponential growth, but as I've talked about many times, it's not. It's not doing exponential growth. It's doing power growth. A little bit declining returns every year. Even though the returns are very high, okay, it declines. But it's still huge growth. What's the trend today? 88,000. What's the price? 95,000. Right there. Trend drops out for the day. 90. Yeah, I don't actually know why I have a few gap days there. It doesn't matter. Calculations are the same. So 95,000 is the price. The trend, 90,000 roughly. Okay. Exponential, like I've said many times, way high. 300,000, which is not even realistic. Doesn't make any sense towards today. So why follow that trend? But if we want to follow both trends, let's follow them out for Bitcoin until the end of the decade. Power curve, 600,000, 560,000. Exponential, 42 million. I said that on the last video, didn't I? Look, there are projections and then there are projections. All right. Some people like to project their values, as noble as they may be, onto something that is working completely different than how they think it is. That's the goal of what I'm trying to do. I'm trying to help people just understand in a very basic math, physics, statistics sense, this is how systems grow. Bitcoin is not growing exponentially. You can clearly see it from this kink today, moving out to just intuitively. If you think that Bitcoin is going to be $42 million in 2030, I mean, I got a bridge to sell you, but it's not that I wouldn't love Bitcoin to be that price in 2030, but that's not the trend that is on. That's not how systems like Bitcoin grow. See Scale, again by Jeffrey West. Bitcoin is moving in a power function. It's growing for every 12.7, 12.8 increase in days in the life of Bitcoin. The price of Bitcoin doubles. Okay, I've talked about that before as well. So that's where, if you want to really have the rubber hit the road, that's where I think you can see the difference in the way people define systems. And here, in my opinion, we can just clearly see that certain systems move in power, i.e., Bitcoin moves in power. Certain systems move in exponential. Certainly not power for stocks. Markets, stocks, bonds, banks, gold, they all move and are, continually adopted, as is the rate of growth of the world, by the way, in exponential fashion. Slow, continuous, constant rate of growth per year, constant doubling time. That is not the case with Bitcoin. So, think I will leave that here. Thank you, Fonzie. Appreciate it as well. If there are any other questions, I'm happy to answer. We can look at some other charts as well. This is the point of me going live as well, trying to get more people watching, even though European morning time is not so easy, perhaps, for an English speaker. I don't know. But yeah, this is how it looks at the end of the day. It's not a crime for any system to be growing exponential. It's not a crime for any system to be growing in power. You just got to sort through that, understand it, and then we can see what naturally occurs for one system might not naturally occur for another. So, I don't know. If you guys have anything else, I'm happy to help. I'm happy to try to provide perspective, I guess. I don't want to jump it too early now that I got these nice charts here. So if you want me to zoom in on any other thing, I'm happy to. Doesn't look like it. So no problem. We'll keep doing it. Appreciate it, guys. Thanks for checking in. And that's going to be it for today. So the Bitcoin power trend versus the S&P 500 exponential trend, they are different. Let me know, please, what you think of this, and talk to you soon.